just to take you across that we've just seen from Shopping Centres Australasia, we got that just prior to going to the break there. So we've seen a rise, actually, I should say a fall for their net profits, down 66%, $69.6 million. Their first half funds from operations was up 4.9% to $56.1 million. They have raised their FY18 funds from operations guidance to 15.3 cents per unit and raised their distribution guidance to 13.9 cents per unit. So that is Shopping Centres Australasia that has just come through. But of course, the big drop that we have seen on Wall Street likely to feel the effects here today locally as well. As I noted, the Dow tumbling over 1,100 points in the biggest point drop ever. Let's bring in James Gerrish, who joins us now live from Shaw and Partners in Sydney for a bit more on those moves there. James, great to have you on board today. This panic selling, you'd have to say, really kicked into Wall Street overnight. We didn't quite, by the end, see that 10% drop into correction territory. I think it was down about 8.5% since its high that we've seen in January. What did you make of those losses, and do you think there is more to come?
Yeah, good morning to you, Leanne. Obviously a massive night over in US markets. The Dow, as you made mention of, down sort of 1,600 points at the lows. They finished down 1,100 points. So it was 400 points off the lows. So if you want to see some sort of silver lining, I guess you can say that it did rally off from those lows. It looked to me like a capitulation style move in the US market. If you look at the volatility index, it hit 35 overnight. It was 17.5 yesterday, so we're up 100% in terms of volatility. We haven't seen these levels since back in 2011, the debt crisis, the debt downgrade for the US market back in 2011. So that's the last time we saw this volatility. We didn't see volatility like this in the China concerns or growth concerns in 15 or Brexit last year either. So look, it's a highly volatile night. So whether or not we've seen the lows is interesting.
And look, locally as well, I mean, it was a pretty ugly day yesterday for us. I think we wiped out close to 100 points on a local market, $30 billion. Given the fall that we have seen overnight, how much do you think we're expected to drop there today? We didn't see the same extent of the falls, I suppose, that we saw on Wall Street from Friday yesterday. Do you think it might be a similar case today, that we'll fare a little better? Or, you know, what is your expectation going into the session?
Yeah, look, you've got to put the falls in the context, given what the US market has done in January. Obviously, we've only given back a little more than the year's gain so far. January was an exceptionally strong month in the US market. We've simply given back the majority, those gains and a little bit more. You're rightly so. Yesterday, the Aussie market was down 95 points. It was less than the combined drop in the US market, plus what the futures were trading at during our session yesterday. Again, today, we're looking at a drop lower than what the US market is doing. I made mention of it at the start of the week. Any decline in the Australian market is likely to be less than what happens or plays out in the US market. The US market's been filled with speculation. Cash is low. Leverage is reasonably high over in the US. The rise of passive investing, ETFs, etc., where it sort of attracts hot money, trend following money, if you like, has been massive over there. And I think that's one of the reasons why these falls have been exacerbated in the last couple of days. If you look at bond markets, credit spreads haven't moved a lot. They're obviously expanded slightly, widened slightly, but only a couple of points. They're not instigating or not showing that there's big underlying issues at play just yet, Leanne.
Yep. Okay. Look, I want to get across some of. Obviously, we'll be watching those potential falls at the open here, but there's also a number of stocks in particular that we are following today, getting into the heavy part of our reporting season. Macquarie is just coming out with their trading update. They're expecting their full year profit to be up about 10%. They say that their trading conditions in the last quarter were satisfactory. They also say that their financial position comfortably exceeds their regulatory requirements. Just on first take, I know this is, again, just sort of breaking here. Actually, I'm just getting a little bit more detail on some of this as well here. They're, as I say, expecting, their profits to be up by about 10%. Their FY18 year-to-date net profit contribution from their capital markets is facing businesses is down, actually, on FY17 year-to-date. Their effective tax rate is currently expected to be broadly in line with the first half of 2018. But all in all, expecting their profits to be up. How do you think the market might take this update from Macquarie today?
Yeah, I think that'll be a reasonable update from Macquarie, obviously notwithstanding the market volatility that we're going to see on open this morning. I think that the fact that they've put a number around earnings increases for the year, I think that's going to be a positive. Normally Macquarie simply suggests that they're going to be up on the prior PCP, but they've given actual guidance around how far they're going to be up, which I think is probably above what the market's anticipating. That said, Macquarie's had an exceptional run-up in price in recent times. So, results of companies that have performed really strongly need to be strong. That, to me, as I said, I haven't looked at the underlying numbers there, so, take that as the caveat. But it looks reasonable in my view, Leanne.
Yeah, sure. All right, let's talk shopping centres Australasia. They've lifted their target for their annual funds from operations and their distributions because it seems to be benefiting from the business turnaround at their supermarket chain. Just to take on some of these numbers, I mean, yes, their net profits were down about 66%, but raising their guidance there for their funds and their distribution. Have you had a chance to look at some of those numbers for shopping centres Australasia?
Yeah, So it looks like that net profit number is slightly ahead of where the market was positioned. Market is positioned around the 55 million for the half. In terms of the distribution guidance, you said they were guiding the 13.9 cents. The market was looking for a half year around 6.8 cents. So in the top of my head, I think that's a slight beat in terms of the distribution guidance by a couple of less than a cent, but it's still a beat there, Leanne. So it looks a reasonable result for mine. The market was pricing in this drop. Expectations, I say, was around the 55 million in terms of the net profit number for the half.
Yep. Okay. I guess not a good day to kind of be reporting, as you say, given a lot of the volatility. What else are you going to be watching? It certainly is a big week, obviously, CBA and Rio Tinto tomorrow. Is there anything else specifically, any stocks that we'll be looking out for in today's session, James?
Yeah, have a look at for Magellan. Magellan's out today with their first half results. Net profit around the $50 million mark and dividend around the 45-cent mark. So that'll obviously be interesting there. Janus has their full year numbers. So Janus Henderson, we don't cover that stock anymore, but look for an update around the integration between Henderson and Janus, the synergies that are coming out of that. That merger or coming together of those two asset managers. As I said, it's an interesting day to have a lot of asset managers report their numbers. Macquarie obviously giving an update, Janus, Magellan, etc. There's going to be a lot of volatility play out in the market today. Weakness on open, SPI's down around 130, 140 odd points. But again, I just reiterate it does to me look like a reasonable capitulation style low. So if I'm looking at markets and how oversold markets get, that did look like a sort of a panic low in the US overnight. So it'll be interesting to see how our market opens, but we'll be on the buy side this morning rather than the sell side in aggregate, Leanne.
Yeah, okay. All right, excellent. Appreciate the update there this morning, James. As always, thank you so much.
Thanks, Leanne.
As James Gerrish joining us there live from Shaw & Partners. We're going to take a break. When we return, Xero CEO Rod Drury will be joining us live to talk about the company's consolidation on the ASX. So stick around.